Hi, Jon. Thank you so much for joining us on Facebook.
Hi, Brooke. It's great to be here. Thanks for having me.
All right. So here's the thing. We're back to talk about PPP and the taxes. And I feel like, surely we have beat this dead horse enough. And yet they really haven't told us everything. And they released something new recently. So I want to talk about that. But first, I want to introduce you to everybody. Sound good?
Sounds good.
All right, so this is Jon Karp. He is a tax and consulting partner at Whitley Penn. He's been doing this for over 25 years, and he does both tax advisory, financial services, and public accounting. You focus on C Corps, S Corps, partnerships, and high net worth individuals. So I think pretty much everybody watching this is a C Corp, an S Corp, a partnership. And if they're not, they would like to be a high net worth individual. So I think you deal with our people. You get us. So you do a lot of work in energy because shockingly, you're from Texas, healthcare manufacturing. But the one that I really like is professional services. So again, those are our peeps. So you've done a whole bunch of stuff. You were on the executive committee and chairman for the Texas Business Hall of Fame, which, that's pretty cool. And you're a committee member for Green Family Camp. So let me just say you do a lot of volunteer work, which is awesome. This I think is fascinating about you. You have a degree in religious studies.
This is what I often tell people, that if you would have told me when I was 21 and in college that I was going to be a tax partner, and I love being a tax partner at Whitley Penn, it's been great for my family and I, but if you would have just told me I'd be a tax partner anywhere, I think I would have told you the Grand Canyon looked really good. When I'm saying to like jump off the Grand Canyon, it just was when I really was going to pursue an entire different professional career, and that was where the religious studies was.
When I went back to grad school, one of the things that I did was a whole ton of testing. They were like, you should be an accountant. I'm like, oh, no. I am way too much fun to be an accountant. I have way too much personality.
And if you would have told me that I would be an accountant and I'd like it, is a whole different story. Like my goal was really, and when I decided I wasn't going to go into the clergy, and when that decision was made, and I said, okay, what am I going to do? And I said, I'm going to go into business. My goal was really to go get the hours, take the exam, climb some corporate ladder, because all the role models I had of anybody that made any money it was all from their stock options and working at a publicly held company. What I found out was I got into this profession and I got into doing it and I loved it. And I still love it today. And, my mom used to always tell me that, we make plans regardless of your faith, right? Whether it's God or anybody else, someone's always laughing at you because you make plans and look what rolls your way.
Yeah, this was not my plan. This is a fabulous life. I love what I do. So not my plan.
Right.
In any way, shape, or form. This wasn't what I thought I was going to be doing.
Well, and clearly, even the fact that we're here today and we're going to talk a little bit about PPP loans, this was in nobody's plans.
No.
So the phrase really is right. Like we plan, and
God
the human being laughs at us. God laughs at us, right?
Yeah. So. He's laughing. She's laughing. It's laughing. I don't know what you believe.
Whichever pronoun you want.
Yeah, there is laughter happening.
That's right.
All right, so let's do a quick PPP review.
You bet.
You want to review or you want me to review?
Well, no, I'm happy. So just remember kind of in March, right, we get this whole CARES Act comes out. The government comes out with the CARES Act and says, we're going to give you, I'm just going to really break this down. We're going to give you all this money and we're going to let you take this money and we're going to give you the guidelines on what you can spend it on. So you can spend it on payroll, you can spend it on mortgage interest. Actually in the CARES Act, it talked about that you could spend it on other interests. But if you look at what you can apply for forgiveness, that is not there.
Yeah, just mortgage.
Right? Just mortgage, right. And it's a pre-existing mortgage.
Yeah.
And then you can spend it on utilities and rent.
Oh, but only if it's an existing rent and only if it was existing utilities.
100%. So you can't go move locations. And then that was pretty much, and it was pretty vague at best. And that was what the rules came out and said. And slowly, the SBA came out and said, well, and then we'll give you guidance.
Well, hold on. Wait, there's one thing you forgot that I love about the CARES Act. And it says that when it gets forgiven, you can't be issued a 1099 to have to take this as income, which is what normally happens.
Right. Well, so here's the interesting component, which is you're stealing my thunder for a little bit later. So
Sorry.
It's okay. So that's right. And if you pay attention to all the verbiage today, what's really happening and what people are talking about is not the forgiveness of the debt. And when they're talking about the taxability, we're not talking about taxability of debt forgiveness, which or COD income, right? So we're not talking about that type of debt forgiveness income. What we're talking about is the fact that you can't use tax-free money and deduct the expenses that so if you receive money tax-free, you then can't turn around and say, oh, I'm going to take that money and I'm going to turn around and pay a bunch of expenses and deduct it. And so what we've really heard from is the forgiveness of the debt is not the issue. It's the deductibility of the expenses that the loan was given for. So again, you're not going to get the 1099, right? You're not going to get that C, cancellation of debt. It's because the idea is you're supposed to move the expenses off of you keep it on your books P&L, but move it off of your taxable P&L.
Well, and when we read that, my team was doing total dance of joy. And that, you're not going to be issued a 1099. So we're all doing the dance of joy. And Laura Munson on the team. Laura's going, I think you guys need to not celebrate that so fast. We're like, but this is what the bill says. She's like, we're going to need to wait for that Friday afternoon guidance. And sure enough,
they issued it. And interestingly enough, so the guidance comes out, right? It was notice 2020-32.
Can we talk about the fact that guidance came out for the longest time every Friday at 4:30 Central?
Oh,
we're like, about time for some guidance.
Well, let's just go with this, right? So you asked me about some releases that came yesterday, and what did I say? I said it's just the gift that keeps on giving.
It is. This is
just on a Thursday. That at the end of the day, what you've really seen is the legislature has turned around and said, and when I say legislature, congressmen and they've said this wasn't our intent.
Mm-hmm.
Having said that, and I don't want to get too much into politics, but having said that, while I think, and given especially what you work with, Brooke, since you work with a lot of folks in the legal community, I really need to be careful about what I'm getting ready to say, but I'm going to say it anyway.
Whoa. I'm going to stop really fast because I forgot to issue like a blanket statement. We are not giving any tax advice today.
Oh, 100%.
This does not establish a preparer-client relationship. We are simply sharing ideas, information, and strategies. Please consult your own tax.
100%. If I had a slide presentation, you would see that disclaimer, right?
Yeah.
It's the very first slide after my name.
We forgot to do that. So there's the disclaimer. It's oral. It's not written. And if you would like Jon to be your tax guy, we'll give you his information.
Very good. And I'm happy to speak with anybody. So even if it's for a quick question, we get emails all the time. So what happened is, if you think about the legislature and if you think about what's really been happening in the country as far as the political and what's just going on in DC, that, I often have said, and I've been said it publicly, that most of my clients, well, I think do they care about who's on the Supreme Court? Kind of, yes. Right. And so I realize you work with a lot of folks in the legal community, so they probably really do care who's on that.
They're a little geekier about it.
But the flip side of that was that most of my clients are all looking for the stimulus relief, the PPP guidance, and what to do. And if you're in support of who the judge is, that's great. If you're not, you'd be just as unhappy if they railroaded her through now. Right. So the unhappy factor didn't make a difference. It would have just been later. And there would have been more people saying, hey, that's not right. You're already the president on the way out. But in the end, it wouldn't have mattered. It still could have been done, because what we now still don't have is we don't have really great legislative guidance. So while the IRS is coming out with some guidance and the SBA has issued a few things, if the legislature, if Congress really said, this is not our intent, then at the end of the day, when are we going to get that intent? And if you think about lame duck sessions, I'm not sure if we're going to get that intent until sometime next year.
All right, I agree, but I want to table that for a second.
Okay.
So we've talked about the fact that you're not going to get the 1099-C, but you also have to move the associated expenses off your P&L for tax purposes. So one of the big questions that everybody is asking is, do we ask for forgiveness this year, or do we wait until next year to ask for forgiveness? And I think that that goes to part of what you're talking about of, is this like, it is a lame duck session. Not much is going to get done. Do we think with a change in administration, something might change? And then recently they released the IRS released guidance.
They released Revenue Ruling 2020-27. And what that did is it clarified things for us. When I say it clarified things for us, is what we've been on public record is that we think you need to be conservative. Because from day one, and if we just go back where what we were talking about maybe 5 minutes ago, and we were talking about the non-deductibility of expenses. Well, when did you spend the money? That I've said all day long, and I've said every day, that it's not about the forgiveness of the debt. It's about when did you spend the money? And you spent the money in 2020. And so what this revenue ruling did is it basically established that fact. It said, regardless of when you apply for forgiveness, you got the money in 2020. And if you expect to have your loan forgiven, then don't write off the expenses. Whether you apply, and honestly, if you apply today, right? So remember, you apply today, so you submit your application for forgiveness today. And depending on the amount of your loan is depending on whether or not you should really go down this path. And we'll talk a little bit about that too. Let's just talk about timing. If you apply today, you have your bank has 60 days to manipulate your documents with you. Or I shouldn't say manipulate, your bank from the time you submit, consider it good documentation. They have 60 days to review it. Then they forward it to the SBA. The SBA has another 90 days. We're 5 months down the path. You don't even have to
with
submit.
6 weeks left in the year.
Right. And you don't really have to submit until for 10 months after your covered period ends.
All right, can we talk about the covered period really quickly?
You bet.
All right, because I read something today that was different than what I had seen earlier. So I want to do this. Originally, your covered period was 6 weeks, 8 weeks, 6 weeks?
8 weeks. 8 weeks.
8 weeks. 8 weeks from issue.
Right.
So
8 weeks from funding. 8 weeks from funding.
8 weeks from funding. All right. So 8 weeks from funding. Let's say you got it April 15th, May 15th, June 15th. It was the end of your covered period. About. All right. And then, so you would have 10 months from that point.
Right.
Then after, when was it? June 5th, June 15th, sometime in June, they changed it and they said, okay, your covered period, instead of being just 2 months, can be through the end of the year. And when they issued loan
24 weeks. 24 weeks.
24 weeks. So
24 weeks.
6 months after. Okay. And then you have 10 months from that point, right?
Correct. Well, and then you have a choice to make. So there was a line in the sand. So if in your example, if you got the loan in April and you were funded, you have a choice between 8 and 15. I mean, 8 and 24, sorry. So you have your choice. If you got the loan after the line in the sand, it was 24.
Right. All right, there was something in there, and I saw this today, and I thought you had a choice on this. If you were issued in the first tranche, where you had 8 weeks, you also had a 2-year payback period. The second tranche had a 5-year payback period. Does the first tranche get to choose their payback period, or are you locked in?
So remember who governs that. So this is what's really interesting. The answer to your question is it's not an automatic deal. Your bank, you have to go back to the bank that issued your loan and say, will you reconsider this on a 5-year payback like the second tranche? Otherwise, you're still sitting at the 2-year.
You're still sitting at the 2-year. Okay. So the guidance that came out recently was, doesn't matter when you get it forgiven. It's all about when you spend it. So for 99.999999999% of us, that's 2020, which means that if we think we're going to ask for forgiveness, we have to take those associated expenses out, which is going to have the effect of raising our net income, right?
100%.
And when you say be conservative, because I work with you guys, like y'all do all my tax stuff. I had to write a big old check in August or September because
don't shoot the messenger like so many of my clients do.
You know what, Jon? I have this whole theory. The bigger the check you write to the IRS, the better.
There you go. Well, absolutely. I wish all my clients felt that way.
You know, my grandfather taught me it's better to have, and he was in kind of a different tax era, it's better to have 50% of something than 100% of nothing.
Right.
So yeah, I will take 50% of something all day long. So I wrote that big check. It meant that I'm making more money.
Right.
We gotta celebrate that. But so I have paid in already an immense amount to cover that additional tax liability that's probably going to show up there.
And that's the conservative response, that if your expectation is it's going to be forgiven and you expect reimbursement, then you need to account for that, right? If you think that it's not all going to be forgiven, then account for the portion, right? Reduce the amount or include the amount in expenses it's not going to be forgiven.
And where are we getting this forgiven number? Are we like, that's the thing. How do you prove that? Have they said that yet?
I'm sorry, repeat that.
How are you going to prove how much you think is going to be forgiven? If we don't have to apply for forgiveness, and we also have to talk about the EIDL grant for a moment. Like, right. What are we doing?
So, well, one is most folks are going to be forgiven 100%. Well, I shouldn't say that. We have a couple that we know are not going to be. But if you took the 24-week period, and in fact, the conversations we're having now are much more about, well, do I have to include anything else but payroll? That if my payroll covers 100% of my loan, do I have to include my rent, any of the other extraneous expenses? And the answer is no, just use your payroll and be done, right? Now, you brought up this thing called EIDL, right? The grant. If you receive the grant, what they've said is, let's say you got $10,000 in an EIDL grant.
Yep, which is the max.
Right. And you got $100,000 in PPP money. What it says is you have to turn around and reduce that PPP loan by the EIDL grant. Now, having said all of that, right, I want you to just really think, and this is why Congress has to do something. So one is, there are banks that still haven't even opened their portals for you to apply for forgiveness yet.
My bank.
Yep. So you may be ready to go and be really excited and want this off your balance sheet and everything else, but you can't do a thing yet because you can't even apply. So, and what's interesting is, and I don't want to call any banks out, but like one of the banks I know, they were one of the very first people to give money out, and they're one of the last to then figure out this application for
how to do that. Right? Yeah.
And so, and I have clients that have already applied and been forgiven, but realize there is a bipartisan bill on the floor. And this is what has burned me up about the judge thing, because I really wanted them to just deal with this bill. that basically was, if you had $150,000 or less, you had to sign a piece of paper and you were forgiven.
Right.
Right.
So,
Then they've come out with
attestation, where you just say, yeah, I spent it the way I was supposed to. Because the statistics, I don't know if you've seen this, the Bankers Association came on and did a Facebook Live with me. They said it's going to take 70 hours for the average company to fill out their forgiveness application.
So now let's just also think about the other side of that. So forget the company for a minute. You got $20,000 of a PPP loan. You didn't get any EIDL grant, whatever. You got $20,000. There's now a short form, the 3508S, right, that you can now fill out. But let's just jump into, let's say you got 100 and you go to, remember, anything, that's the same forms possibly that you're filling out all of the information. The banker's got to look at all of your documentation as if you had 1.8 million. And if it's 2 million, it's a whole other deal.
Yeah.
Right.
And none of our clients got 2 million, so I'm not so concerned about that.
Well, that's really great because we've had a couple that are really nervous about right now. So,
yeah.
So, but so if you're under 2 million, you're in a pretty good place. But remember, it's the same information. And if you don't qualify for one of those short forms, there's a 1-pager and then there's the 50,000 and below. So if you got 50,000 or less, you're doing really great.
Yeah.
Because that's almost like the postcard tax return again. But again, remember the banker, right? Remember, and we always talk about this in the professional services world. It takes just as long to take care of clients, to process a tax return, and to put it through a system, and to work on a client that's a small company as a really large company. So there is a base amount of time that those items take. For every one of these loans that has to get processed, there's going to be a base amount of time a banker has to spend on it and a base amount of time that the SBA is going to have to spend on it. And so when you really think about time, if Congress doesn't ask, I'm not even sure if there's enough bandwidth to take care of all the loans that are out there. In fact, there's one bank that was sending invites out. So you may be ready to apply for your forgiveness, but you just haven't got your invite out because they're trying to manage the forgiveness flow.
Right.
So you get a window of time to submit your paperwork. And then you submit your paperwork for forgiveness.
Yeah. I mean, just.
And it comes at a really interesting time. This is where if we had, and hopefully nobody who's listening is a politician, but if we had true leadership in Washington, right, they'd really be concentrating on whether we're going to get another stimulus bill. What are we really going to do? Because I'm convinced that, let me rephrase this. I was on the phone with some other folks, and we were doing a conference, and it was some congressmen, some senators, and one of the senators said, "You just wait. After the election, you're going to watch states close down. They're only staying open for the election." And this was not a liberal senator. This was a more conservative senator.
Mm-hmm.
And sure enough, and he was saying states are going to close down, both Democratic states and Republican states. And I think what you've watched in the news the last couple of days, right? I mean, Iowa's coming out with stuff. A lot, South Dakota, states that would otherwise be considered more on the conservative side of things, and don't wear a face mask side of things, are coming out and making mandates. And so I think that there's not a great appetite for punitive taxes. So it should be really interesting how this all plays out, especially if you think about, the Biden tax plan, that it's a revenue raiser tax plan. Mm-hmm. There's not going to be an appetite for that. If the economy is really struggling in January, the likelihood of that really all happening is going to be a difficult pill to swallow, and people aren't going to really want to do that. I think everybody also from Government 101 has to remember, regardless of whether it's a stimulus act whether it's new legislation, tax acts. Remember, nobody has a super majority. Nobody has 60 votes.
Right.
So, right. So there's going to have to be some swing votes, and no matter what. So even like, and we're not going to know. The sad part is, really, we're not going to know whether we're going to how things are going to play out till January.
Well, yeah, we've got 2 Senate seats that are going to a runoff. So you bring up the election, you bring up the new administration. I had a client that emailed us and said, I think I'm going to roll my dice and see what happens with the new administration. And I'm like, yeah, I think that's a great idea. However, new administration doesn't come in until what, January 20th?
Right. That's right.
By January 20th, the IRS has already set up everything for the tax year, issued all the tax forms. The IRS is not known for being really nimble. Like, what are the chances that even if on January 20th, Biden comes in and signs an executive order that says, not only are you not going to get a 1099-C, but yes, you can in fact deduct those expenses. Like, the IRS can't react to that, can they?
Well, realize there's not, okay, not having seen the forms that they're accounting for the PPP loans. In fact, so we were on so we did a webinar, and one of the folks on the webinar was an old IRS commissioner.
Mm-hmm.
And so the question came to the IRS commissioner, to Steve, and it was, Steve, he was an interim IRS commissioner, so I should probably caveat that. But we said, Steve, isn't this going to throw the IRS algorithms off? I mean, for audits, like, they're going to have to figure this out. So remember, I'm not sure if we're not going to get the 1099-C, but remember, all I'm telling you is you're going to have a non-deductible expense. So you're going to have an adjustment on if you're a business, on your M1. If you're a sole proprietor on Schedule C, you're just not going to include it. So
everything's actually going to happen on,
well, as far as we know,
on the accounting side,
it's all
on the preparation side.
Right. That is right. We're going to have to account for it, but it's not going to be like, oh, here is the money that goes in that box of the forgiveness amount, right, or the expense amount that you can't take. We're
not going to have a line item that says non-deductible PPP expenses.
Right. So the reality is, you could be nimble, right? And remember, things aren't due till 3/15 and 4/15. And mm-hmm. My advice to most folks today is, don't be in such a rush to file your tax return. I think the other item is,
you know me, I'm usually a January 15th kind of gal.
Yeah, not this year.
No, not this year.
Not this year.
I'm a March 14th kind of gal.
So I think, and I wouldn't even be a March 14th kind of gal. I think, depending on what happens. So also remember that 2020 is sailed. So you're right, it'll only be in some sort of executive order or some sort of reconciliation bill. And I would think it'd have to be under some reconciliation act, because I think it's just too much money. Or we'd have to have another stimulus bill that says, okay, we're not going to give you any money, but we're gonna waive this.
We're not going to ding you.
We're not going to ding you, right? We can pontificate what they might do all day long, but remember,
we're probably not going to have all 3 parts of the legislative branch, or both parts of the legislative and the executive branch, all the same party. Because
that would be
Republicans look like they're going to hold the Senate. So no one can ram anything through.
100%. And so having said that, realize even if there's going to be legislation, it'd be very unlikely that today, if the Democrats ran the tables on everything, right? So they controlled the House, the Senate, and the presidency. It could be that we would have something date back to the beginning of the year. What we see when deals are struck, the way that it's lining up, if those 2 Senate seats stay and there's a mixed Senate, and a Senate or a congressional that's not unified, right?
Yeah.
Then what would happen is, most likely it'd be from the date of enactment, so that you would have some planning time. But most things aren't going to go back to 2020. It's going to be 2021. Right?
So you're kind of thinking there's no hope. We're going to lose this deduction. We're going to lose this.
No. That could still be in a stimulus bill, but when you look at the stimulus bill and then you look at tax planning, I don't think if they come back and they change tax rates, right? That may be back, but that may be retroactive. But a lot of things could be from the date of enactment forward, right, or depreciation rules, or because the whole idea would be to raise the money. The idea, if you look at any of the tax items under Biden, most of it is revenue raisers, right? Mm-hmm. He said, okay, for 400,000 and below, we're not going to raise revenue, but for anybody who makes more than that, we are going to raise revenue, right? And so when you look at that model, because of the congressional units that aren't going to be unified, it would be really difficult to get it back to the beginning of the year.
Okay. All right.
Covered a lot of turf here.
We have, but I have a question because this is an email that went around my team, and so we don't give tax advice, right? We're CFOs. That's what we do. We're going to try to make your company run more profitably. However, we talk to a lot of tax people because we don't do the tax. So we talk to the tax person. We really have been pushing this PPP forgiveness. Like, when do we forgive? How do we prep for it? All of that. We've really been pushing back to the tax people and having them make a decision. And so we've been talking to a lot of people about this. And we had a guy last week say, I have some clients that aren't going to ask for forgiveness. They're going to repay the loan because it's going to ultimately cost them less.
Actually, what's really interesting is it's pretty much the same.
All right. So talk this through, because some people on my team were like, that's really cool. And some people on my team were like, all right, now how's that going to work?
Well, when I say it's really going to, because they're going to get it's not really the same. Let me back up. Because if you get $100,000, to take that $100,000, let's just say you're 35%, it's going to, assuming that you're a flow through profitable entity, and it costs you let's just say 35%, so it's $35,000.
Right.
But remember, you got 65 that you could do on whatever you wanted.
Right.
Okay. If you don't, so here's the issue. If you don't apply for forgiveness, right, now you're going to have to earn money to pay it back. You're only going to have wages of $100,000, of which you're only going to save 35. So you're short. It's really going to cost you about 30 grand. Did you follow that?
Yeah. So go over it one more time.
So if you get money, you get a free $100,000, and we say you have to pay tax on that, because it's easier to deal with what you got as the loan versus your expenses, because you're assuming that you spend 100% of the $100,000 on the expenses you can't deduct, which will increase your taxable income.
Right, by $100,000.
By $100,000. So if you're in the highest tax bracket, that's $35,000.
Okay.
If you just pay it back, right?
Mm-hmm.
Then you had to either earn the money to pay it back, or you just never really used it.
Mm-hmm.
But if you were just thinking, okay, I'm going to pay this back over time and use the cash, remember, if you deduct $100,000 of expenses, the tax savings on that is the same $35,000. So the delta between the 65 you would have had is, right, the delta is, you got 65,000. So it costs you an extra $30,000.
All right, so don't do it.
Yeah, I would say you go for forgiveness.
All right.
Now, if the money's still sitting in your bank account, then send it back to them. But realize they're actually still taking applications. They're still open for business.
Still?
All the money is not gone.
Oh my gosh, I thought it was totally gone.
No. They've actually said they've entertained some applications. So
I know someone who did not get one, who so was entitled to one.
Right.
Because his business was completely shut down by it. I'm going to give him a call.
Well, so it's really interesting also is the SBA, and also if you don't qualify for the PPP loan, you still have the emergency, the loans, which are still very
The
attractive.
idols.
The idols, right? Very attractive. So from a business perspective, there's a lot of attractiveness to what's going on to be able to get money at a really cheap price and it's cheap cost, right? I mean, interest rates are low. I think the only thing that, or the only real critical factor that everybody has to remember, in fact, I was on the phone call this morning of an entity that's going through a merger acquisition, and they have a PPP loan of about $1.8 million. And remember,
Oh, look, they're under the $2 million number.
They're under the $2 million number. But what does that really mean, though? The SBA, you still have to go to the bank, ask them for permission. You have to get permission from your banker and the SBA to transact a sale, any type of trade, right? So if you're selling your business, you're merging, and there's all kinds of holdbacks. I mean, because they're going to protect their interest.
Well, yeah. I mean, if you read the idle loan docs, they say you can't move your office.
Right.
You can't sell any equipment.
Right. That's right.
You can sell your inventory, but you also can't use the money to buy new equipment.
Well, I want you to think about this for a minute. What if you get kicked out of your office? So you're moving. But anyway,
I know. This whole permission from the SBA to move your office is kind of mind-boggling.
But if you're closed and you don't have anybody walking through the door, you're not going to have a choice but to move your office.
Yeah.
It's not even prudent business sense to keep your office open, regardless of the loan you have. And it's the infrastructure today of trying to navigate that is very difficult. I think you're going to see a lot of folks paying loans back. One is they may have not needed it, and and remember, borrowing from the SBA comes with strings, and so you may choose to not have those strings.
All right. So, and what are some of the strings besides the fact that you can't move your office?
Well, you can't sell any assets.
Yep.
Right. You have to, and I'm not sure how they're going to do this because the idle loans were so many, but they have financial reporting requirements. I mean, you're supposed to send them annual financials. Now, I don't know where any of this is going yet because I don't know. I mean, I'm saying this, but I mean, I have several clients. Like I have several clients who have loan docs, but they don't have any guidance as to, well, what is my end of year reporting requirements and how does that work? And remember,
or even how, when, and how much, and where do you send payments when they start?
Well, I can actually say this. So there's part of my family that has a small family business, and every month they send that. They started sending saying, if you want to start paying early, you can, and here's how to pay it. Now, some clients may not be getting that yet.
Huh.
Yes. So, but I don't know if the infrastructure is there to really handle the influx of data, right? I mean, you haven't heard about thousands of people going to work for the SBA yet. So
no. All right. So let's go back to tax because that's your geeky bliss, Mr. I decided not to go into the clergy. All right. End of year planning. So if you're conservative, you've already written a check.
Well, no, you may not have written the check yet, but by January 15th, you will have.
I don't know. They made me write mine months ago. You guys were on it. Brooke, write this check. So just general kind of year-end planning. How is this year different as you're doing year-end planning with your clients?
So I think this year is different for a couple of reasons. One is, the largest question we got before the election when you thought, okay, so forget about a Trump-Biden comparison, but we kind of know what Trump's plan would have been. Just would have been as is. There are a few minor things that he may have tried to do, but nothing great. Right? From the perspective of if the expectation is that the economy recovers, right? We come out of COVID-19.
Yeah.
And things are humming in the spring. I think we could expect to see some sort of legislation to have a revenue raiser bill somewhere. Now, whether it can get moved through the system, I don't know. So if one was trying to make a decision, should I enter a transaction and close this transaction by the end of the year? Normally what we talk about is push money into next year, don't pay tax on it this year. We are at a historic all-time low tax rates. We know what those tax rates are today. I can't promise you that 2021 tax rates are going to be cheaper.
And the chances, I mean, you're right. It really does depend upon if the economy recovers and if basically there's an appetite to do.
I mean, and let's all face it, regardless of where you sit on the political spectrum, I mean, this pandemic has cost this country a fortune.
Mhm.
And at the end of the day, how much deficit is too much deficit, and someone's going to be paying it back. It's just a matter of when, right?
Yeah.
Like we can't keep, I mean, there's going to have to be some sort of revenue raiser. And if you think about the Tax Cuts and Jobs Act, which was the bill that passed in 2018, realize most of that's all temporary. So most of it reverses out in the end of 2025. So by 2026, remember, taxes go up anyway. So we're really looking at maybe saying if there's an appetite, ending part of the Tax Cuts and Jobs Act a little early. But remember, so let's just go down to say Biden doesn't want to do anything. Like he just keeps it humming, right?
Dude, take everything you can before 25.
Right. Because they're gonna have to change. They're gonna do something. And most reconciliation acts are 10-year bills. But because of the amount that this was adding into the deficit in the Byrd law, they couldn't keep it going for 10 years.
Yeah.
So while they talked that this was the most sweeping tax reform ever in 18, one is the last sweeping tax reform we had was 1986. And it took 10 years to get guidance. And that was under Reagan. That was true tax law. There was nothing reversible out of it.
Yeah.
And I would say in quotes, there was some permanency to it. But remember, permanency is all until the next administration. And
right.
Then, right. So, I mean, in other words, but again, for planning, if you think taxes are going up, then you want to have more income. And I mean, so I'm going to just pay more tax this year because you're paying at a lower rate, and save your expenses and your losses for next year when you think the rates might be higher. Now, I don't know if that's really going to happen, because in order for that to happen, and even if you think about the appetite for raising taxes, so let's just go down the path that the Georgia 2 Senate seats in Georgia swing blue,
Mm-hmm.
right? And so now we've got a 50-50. Well, wait, are we up to 50-50?
I think it's a 49-51 if that happens, isn't it?
I don't remember.
I'd have to look.
I'd have to look now, because I'll admit that I kind of stopped following it for a little while, and I should have probably looked it up before we got on this call. But
we didn't know that the Georgia runoff was going to be a major part of this.
Well, but at one point I thought the Georgia runoff, like in order to have that above 50, right? So Vice President Harris, or the presumed Vice President Harris,
mm-hmm.
to try and call anything on this call or on this conversation, then that would be, she'd be the final straw, the tiebreaker, right? And you just can't keep doing that. And I'm not sure. And then you have certain more moderate Democrats that may swing the other way. Like, you just don't know how that would really look at the end of the day. So it's going to be a tough road to get true legislation passed.
Yeah.
So.
All right. Is there anything that we haven't talked about today relating to PPP and forgiveness and tax that you think we need to discuss?
I don't think so. I think the most important, I think the only other thing that we didn't talk about is, make sure you have good documentation. I think at the end of the day, while we didn't have a slide presentation, what I may send you is a slide I put together that really talks about, look, here's all of these documents you might need. And, and you may have to document why you needed the money. And there could be, what we saw when folks were applying for the loan was we had one bank that said, just send me your payroll tax reports and we're good, right? We're going to give you 2.5 times your payroll, your average monthly payroll. And we got the loans through those banks. We had other banks that said, we want that information. We want what's under your kitchen sink. We want financials from the last 4 years. And you're thinking that's so beyond the scope of what this is. Mm-hmm. And our expectation is
forgiveness is going to look the same way.
Some banks may request more data. Some banks may be really happy with data. Some banks may say, well, gee, your loan is over X amount. Therefore, we're going to require you to produce a little more than the $100,000 loan. And I do think that if your loan is $150,000 or less, well, I say be conservative and don't deduct those expenses. There still may be, given what's happening, right? I mean, the numbers, like, I heard the other day, I had someone at my house who's one of their siblings is in the medical profession in Dallas. And at that point in time, he said, my family member told me there were 61 beds left.
Oh my gosh. I heard 79 in Dallas County not too long ago.
Right. So that's my point, right? That's not a lot of beds left. And so there could be an appetite where for some of those smaller loans for the signature. So whether you pay our firm, whether you just do it yourself, if there's an opportunity that it may just get forgiven and be done, then why spend all the time? And so if you have the patience to wait to see if something happens, and it really, remember, if something happens, it's not going to happen. Even the conversation won't start happening until February and March, right? That may be COVID and getting this under wraps is what the president-elect, if you believe he's the president-elect, has said that's on his first priority. Stimulus bill is probably one of his second priorities, but it's not his first priority, right? It's getting the virus under control. So, even if there's legislation, the expectation would be that it might not be till June that it really gets signed.
Right. Well, and let's think about when the first PPP loans came out. They were in March?
No, the bill was passed March 27th. The applications opened April. You're going to make a liar out of me. I want to say April 4th, maybe.
All right. So let's say the first ones probably got funded April 15th.
A little before, like I know some people got it like April 8th, April 9th. Okay.
April. All right. So April 8th. That means that if you chose the 24-week period as opposed to the 8-week period, which did that require you to do anything?
No.
Right. So like you can make that on the fly at any moment. Boom. I just made that decision to go with 24 weeks versus the 8. So you get it April 8th. Let's say April 10th, because that's my brother's birthday. So you get it April 10th. Your period isn't over until, October 10th-ish, right?
Right.
And then you have 10 months from that point to file for forgiveness. So we're talking about August 10th.
Right. That's when, so, however.
Yes, the first ones are going to be due August 10th.
Well, but you're not going to be, but my expectation is we should have some, well, I won't say anything anymore, but the hope would be we'd have some guidance like that.
Right. But that's my point. We do have time.
Right.
Sit and wait.
That's right. There is no real rush. I mean, I think the guidance that came out yesterday kind of really solidified what our guidance has been to people.
Mm-hmm.
Right. It just kind of, it took, the IRS came out with the ruling a long time ago, and this just put some more, I should say some more knives in people's hearts, but I won't really say that, but it just put a fence around that and kind of said, this is the way we think about it. And this is the way you should think about it. And it's not any different than what their ruling was. It just clarified it.
Yeah.
Right? It just put some more legs on it for us. They just gave us the seat. And if you sat on the seat, you fell on the floor because you really didn't know what they were and you were upset. Now they just put the legs on the chair, on the stool. And I do believe that will something, and again, remember, that's the IRS. That's the whole thing. Will the legislature come out and say, no, this is what we think should happen. And if you pay attention, whether it's, so there was something that happened, and I can't even remember what the case was, but Justice Roberts came out and said, no, they just need to take care of this. And he refused to rule on something. And I don't remember what it was about now, by the way. But even the IRS, someone said, look, if the legislature wants it to be different, they have to act.
They have to legislate it.
Otherwise, right, we have to go under the parameters of how this comes in and what we think. They don't have the ability. They've got to legislate and give guidance versus let us think we know what they want.
All right. So Jon, if people want to get in touch with you, how do they get in touch with you?
So they can get in touch with me either by phone at 214-393-9400, which is my direct dial. And then my email is jon.carp@whitleypenn.com. The only caveat to that is make sure you spell Jon with 3 letters, Jon, because if you put JOHN.Carp, K-A-R-P, it's not with a C either, then that's the way to get a hold of me. I've had someone who finally called and said, you never return my emails. And I said, where are you sending it? And they said, jon.carp@whitleypenn.com. And I said, how are you spelling it? And they said, JOHN.CARP.
You're like,
said, well, that's why.
You're wrong on both names.
So,
yeah, my uncle spells it Jon too. And I asked my grandmother one time, I'm like, why Jon? And she's like, I just saw it that way.
well, I mean, I joke. Originally, my parents thought Jonathan, and then they said, no one's ever going to call him Jonathan. So we're just going to say to Jon. I do in public a lot of times when I'm in front of a group, I say it's because my parents thought letters cost money.
My brother is named Jon, John, but we call him Jonathan.
There you go.
And he has gone through life. He's the only person I know whose nickname is like way longer than his original name. And he spelled Jonathan with an H. So he's
right.
like, yeah.
So there's one other thing that I'd like to point out. If you go to whitleypenn.com, we have a COVID resources page. And we also have where you can sign up for alerts. And so even with the guidance that came out yesterday, we'll then put an alert out on our website. And then if you sign up for the alert, you're going to get the alert. So we've tried to, I'm not going to tell you we're always 100% the first people to put out an alert. Like if we're not sure where it's going, we may hang for 24 hours to wait and see. But we've tried to be pretty on top of COVID and what's happening and legislation, and all of that data is written internally. Like it's all being written by our in-house folks. So we have a very talented group of people that do that. So.
All right, let's do a quick recap. You ready?
I'm ready.
Okay. IRS has come out and said you lose the deduction when you spent the money. So 2020 doesn't matter when you file for forgiveness. When we are doing taxes and those expenses are not allowed, that change will be made at the tax prep level, not at an IRS form level. So it'll be
as far as we know, correct.
As far as we know now. The good news about that is that legislation can come through retroactively and fix that. So we may have the opportunity to have some legislation that actually clarifies and delivers on the original intent of the bill. Absolutely go for forgiveness. The math does not really work out to pay it back and be cheaper. So go for the forgiveness. We are in an extraordinarily low tax environment. Pull everything you can into 2020. Definitely pull it into 2025 because we don't know what may happen, but at some point we've got to pay the piper.
Well, and by the way, when I say pull it into 2020, I want to be really careful. Remember, we give that disclaimer. You need to consult your tax advisor first, because if you think nothing's changing in 21, then you're going to roll the dice and hope the taxes don't go up based upon the legislation.
Right. And we don't know. All we know for sure is 2020.
Right.
And that there's a new administration coming in.
That's right.
That's all we know. And don't be in a hurry to ask for forgiveness. You have until, realistically, the earliest ones are going to be, the earliest forgiveness apps are going to be due in the first week or so of August.
Right.
And so we've got all kinds of time to roll the dice and wait and see. Hopefully.
Yeah, there's plenty of time. No reason to rush.
Yeah. And I think that's really important. We had a client that got an email a couple of days ago that had lots of little asterisks and important and read now and PPP loan forgiveness from his bank saying, you have not submitted your PPP forgiveness application. And they're like, oh my gosh, so they sent it to us, which is, look, we're doing all of our clients' PPP loan forgiveness application. So he sent it to us, hello, I thought you needed to see this. We're like, we got months.
And that's not to say that you shouldn't have your application kind of mocked up. It just means you don't necessarily have to submit it.
We don't have to submit.
Right.
So, all right, Jon, this has been awesome. Once more, if you want to get hold of Jon, it's jon.carp with a K at whitleypenn.com. And what's your phone number again? Your direct dial?
214-393-9400.
All right. And Jon is awesome. Jon is my go-to guy whenever I have a question. I'm sure he loves those 10 p.m. emails. Okay, Jon, I had this thought.
Anytime. Thank you so much for having me.
This is awesome. Thanks so much.
Thank you. Bye-bye.
Bye.